The road to $200,000. Why Bitcoin's bull market is not over yet. Bitcoin skyrocketed in 2024, gaining over 121% year-to-date, capturing global attention. But its bullish streak might just be getting started. Is Bitcoin en route to a monumental $200,000 valuation? Let's explore how institutional inflows, an impending supply crunch, and global adoption are shaping this meteoric climb. Major institutions are pouring billions into Bitcoin, reshaping its investment landscape. With the approval of U.S. spot ETFs, accessibility has surged for both retail and professional investors. Over $30 billion in net capital inflows demonstrates unwavering confidence and propels Bitcoin's growth. The SEC's endorsement has also energized investor sentiment. As regulatory clarity strengthens, prominent firms adding Bitcoin ETFs to portfolios symbolize adoption at scale. This influx showcases an undeniable shift. Bitcoin is no longer niche, it's mainstream finance's disruptive darling. The U.S. fiscal deficit's skyrocketing levels, crossing $36 trillion, are shrinking trust in traditional currency stability. As inflation looms and geopolitical uncertainties rise, investors seek hedges. Enter Bitcoin, an increasingly popular alternative asset alongside gold in the debasement trade. Even central banks, long tethered to fiat reserves, are reconsidering Bitcoin for portfolio diversification. Nations like Germany and Switzerland are exploring it as a strategic reserve, signaling a paradigm shift in global finance. Could Bitcoin dethrone currency-dominant assets? It seems plausible. Front-running this trend, companies like MicroStrategy have made Bitcoin an integral balance sheet strategy. Holding roughly 2.1% of circulating supply, the firm has turned significant Bitcoin acquisitions into a model for others to follow. Corporate adoption serves both business and investor interests. Inspired by MicroStrategy's bold moves, other enterprises are exploring treasury diversification. Bitcoin's introduction to corporate ecosystems accelerates institutional adoption. With every BTC acquisition, the long-term odds of scarcity-induced growth increase. Bitcoin's fixed supply, 21 million coins, creates an unparalleled value proposition. With nearly 19.8 million mined and over 1.5 million presumed lost forever, the circulating supply is shrinking. This ever-tightening availability directly feeds into Bitcoin's bullish pressures. Moreover, high-value investors and governments holding tokens reduce liquidity further. As inflation drives increased global demand, Bitcoin's rigid supply structure cements it as the ultimate deflationary asset. The result? An asset whose demand exceeds supply at every turn. Emerging markets are showcasing Bitcoin's transformative power in real time. It's increasingly utilized for remittances, hedging against hyperinflation, and giving unbanked populations financial access. Countries with volatile currencies view Bitcoin not as speculative, but as necessary. Meanwhile, developed nations are embracing regulatory frameworks rather than retreating from them. With every new policy innovation, barriers to entry are reduced. The stage is set for an explosion of global participation in the Bitcoin economy. Bitcoin has earned its moniker as digital gold, but how does it match up? With a market cap around $2 trillion compared to gold's $18 trillion, Bitcoin still has room to grow. Hitting even a quarter of gold's valuation would push BTC well over $200,000. It's not if, but when. Gold's outperformance amid strong US dollars has been mirrored by Bitcoin's resilience. The two assets now stand side by side in the race to hedge inflation. Enhanced liquidity and low ownership costs give Bitcoin a compelling edge. Bitcoin's climb to $200,000 won't be without challenges. Regulatory headwinds remain unpredictable, and price volatility keeps skeptics wary. Yet, Bitcoin has weathered harsher storms and emerged with an even stronger foothold in financial ecosystems. Short-term corrections are inevitable, but the narrative of easy-up, hard-down cycles underscores resilience. Bitcoin owners, especially long-term hodlers, form the backbone of this progressing asset class. Bitcoin is shaping a new financial reality, where trust shifts from centralized systems to self-sovereign assets. The road to $200,000 is not just plausible, it's probable. Whether you're an investor, a skeptic, or just curious, now is the time to dive deeper, explore, invest, believe.